I preach this in my classes, my workshops on here, you know, how much risk is in your portfolio?
Mm.
And the one thing I say to people all the time in those classes is please don't invest like you're 30, 35 years old anymore. I'm not. I don't invest like that. You shouldn't be.
And welcome into Protect and Grow Chicagoland Retirement with Chicagoland's certified financial planning professional, Tim Stearns, CFP, your resource for a common sense approach, Chicagoland, on your money, on your finance, on your investments, on planning for your financial and retirement future. We always appreciate your time. Tim Stearns, CFP here, founder, advisor, CFP at TJ Stearns Inc. We appreciate your time, especially, Tim, in the midst of the crazy market, the volatility that we are seeing, some market turbulence, and I think people are reasonably concerned.
Yeah, Peter. I mean, we're getting a lot of phone calls from from our shows, my workshops, and people are coming back to the table. People are really nervous. People don't like instability, and we're seeing a lot of that, in the markets. So I mean, we're getting a lot of phone calls, from people that have said in the past, "Oh, I think I'm okay," and now the market has shown that it can lose money and they're coming back to us because they want to get a plan in order and also have us take a second look at what is going on with their own portfolios.
Now, Tim, in the grand scheme of things, I mean, we're still way, way up from 2 years ago, three, 5, 10 years ago. But that just means we've got more money on the table subject to losses that is going through this volatility. So even though we've come a long way and seen a little bit of a pullback, I think people, when we see the market change direction, when we see those pullbacks, do get reasonably concerned, and probably why you're getting the calls and people coming back around and asking you, what do we do now?
Right. And these are, I preach this in my classes, my workshops on here, you know, how much risk is in your portfolio?
Mm.
And the one thing I say to people all the time in those classes is please don't invest like you're 30, 35 years old anymore. I'm not. I don't invest like that. You shouldn't be. A lot of these people are baby boomers, who've their whole lives are locked up in the stock market. And they believe that, well, I've got a, 2035 fund or a 2030 fund, for target retirement and I'll be just fine. But even like the Vanguard 2015 fund was down over 15.6% in 2022. And, as they say, history has a habit of repeating itself. It really does. So those aren't a cure-all to have those retirement funds. And I would tell them, don't get sucked into the hype of this market that was, uber high.
Risk can sort of sneak up on us sometimes. And I think those target date funds, Tim, particularly kind of a good example of that because people sort of sit back and think things are on autopilot. And then
Yeah.
all of a sudden, some of those target date funds, even with very short amount of time left until the target, which is when people who invest in them intend to retire,
Yep.
like even those lost and can lose substantial amounts of our money and life savings.
Right. And you're looking at to your point, autopilot, right? We have a lot of clients that are pilots, and they will tell you in the worst of weather, they're not on autopilot. So I would say I'd make the analogy here that, the market's been pretty turbulent. And
Mm.
so we want to make sure that you're not on autopilot. That's why we're a big believer in having, hedging risk, basically, stop losses, covered calls, being active, strategic in your management. We're not trying to time the market, but we are going to have defensive measures in there, like breaks on the portfolio, because at this point, a lot of these people have earned their whole careers. Their number one uh, asset besides their homes are these 401ks, and now is not the time to be playing, you know, playing games with your all that money.
Yeah, a lot of times even more than their homes. And Tim Stearns, CFP, the team from TJ Stearns, ladies and gentlemen, before we go further in talking about the risk, the volatility, and what you need to do to approach it, I want to remind you that they craft diversified long-term strategies for your enduring financial confidence regardless of the market conditions. That is what having a protect and grow written retirement blueprint is all about. That's what you get there at TJ Stearns Inc. That's where you get the protect and grow written retirement blueprint. And if you would like to get your own, which blueprints out income, investments, taxes, healthcare, legacy, lots of details into each of those five core topics goes into the written protect and grow retirement blueprint. If you'd like to get yours, give Tim Stearns, CFP, and TJ Stearns Inc. a call, 800-640-2256. That's 800-640-2256. 800-640-2256. Now, Tim, investing is about looking forward. It's about hoping to make profits 5, 10 years down the road, not necessarily what has already happened over the last couple months, but having a diversified plan with that long-term perspective is what, and key word there being plan. That is what is going to keep people level-headed during times of turbulence and volatility.
Well, I mean, to your point, diversification is always huge. A lot of people that are coming in to talk to us right now, they haven't rebalanced in years. Stocks have been up, bonds have been down. So they're sitting there, with a really big concentration in stocks. I'm going to go a step further in concentration and talk about, they're playing games with these Nvidia and
Tech stocks in
Apple.
particular. Doesn't it
It,
doesn't it feel like this is like the 1998, 1999 dot-com bubble all over again, Tim?
Yes, like we said, history has a habit, right? And I'm seeing that, and I'm telling people, avoid the hype, the over concentration in these tech stocks. The Magnificent Seven that, in 2022 they were the dogs, of the day, and now they're, and then for a bright spot here they were nice, and now they're not so much. So we need to make sure that by having your portfolio diversified and having guaranteed income that gets you away from having to concentrate on these certain stocks.
Tim, I remember reading, and I don't know the exact number, but like the market itself, many mutual funds, many investors back in the late 90s were so over concentrated in these up and coming tech companies that the market itself, because of this over concentration, over 2000, 2001, 2002, lost like 50%. Whereas if you had had a more traditionally diversified portfolio across all of the sectors of the economy, you actually would have fared decently well in comparison. I don't remember the exact number, but it was significantly less as far as the loss and the damage if you had that proper diversification. And I know this is why you talk about correlated and non-correlated assets on this program so much, and the value of having pieces and components that are not tied to the same holdings and going in the same direction.
Right. And that brings me to the other point that we try to do with our clients is having non-correlated assets. I ask people when they're in class, think about what you have in your portfolio that's actually non-correlated. And they'll ask you, what does that mean? Well, back when I got in the industry in 1994, stocks were down, bonds were up. It was adverse relationship. Well, now, even Bitcoin, bonds, and stock, cryptos are all kind of syncing together. And so when they're down, they're all down, just by certain different degrees. So we tell people, make sure you have cash, commodities, annuities, CDs, cash value life insurance with living benefits such as long-term care. These are the things that we're telling our clients, and that's what we've done in the Protect and Grow Blueprint.
Yeah,
And in my book, I preach about this. You have to have, you use a baseball analogy because I know you love baseball as much as I do. You know, you're watering the infield, and making sure that you've got everything covered, so that you're not going to be too high and you're definitely not going to be too low.
Well, it seems like a lot of people out there are trying to win the game with only home run hitters, right? You need some defense,
Yep.
you need some pitching, you need
Yes, sir.
every position on the field is
Yep.
important. And if you only had first baseman, you wouldn't win many games. And that's what a lot of people have in their portfolios to round out that baseball analogy with you, Tim. I do love baseball. So always always important to remind investors, especially though during periods of volatility, of like rethinking that approach to the risk that we are taking and assessing how much risk we are taking. And nobody likes to see losses, but losses are different, Tim. Down markets have a completely different impact if we are putting money in versus if we are taking money out. And so that's another thing I know that you stress and emphasize is that you want people to understand the difference, that the direction of your money, the direction you are either making contributions or withdrawals, that can matter almost as much, maybe even more than the direction of the market.
Well, I mean, and of course, what you're speaking of is sequence of returns risk, and trying to have the ability to outlast a down market. I marvel that about 90% of people in the United States have no idea what sequence of returns risk is. It's a really simple concept, but it seems not to be talked about much. And that is this: if you retire into a bull market and you have that crystal ball to know this, you'll probably be in great shape. Flip that around, if you retire into a bear market and you're pulling out money from a falling portfolio, you're going to be taking out too much money and you're going to have what we call sequence of returns risk, and it'll adversely affect your retirement.
I saw a pretty cool example of this. And again, I can't quote the exact numbers here on the radio. A lot of numbers get confusing on radio anyway. But
Sure.
basically, the concept was if you have this random sequence of returns, it up 10, down 12, up 16, down 5, 10 to 20 years of returns. It does not matter what order they happen in if you're not adding money or taking money away. You can shuffle those different returns,
Yep.
keep them the same, but shuffle them in any order. And if you start with 100,000 at the end of that period of time, no, regardless how they happen, you've got the same number.
Yep.
But the moment you start adding money or taking money from it, that order suddenly has huge impacts on the final outcome. So it's really just like avoid the luck, the bad luck of
Right.
retiring into a volatile or declining market. No problem, Tim. Like you said, I'll just retire when I know the next 5 to 10 years are going to be good years in the market, right? Said and achieved no one ever.
Right. And that's so right. And that's why having a protect and grow blueprint, you know that you have guaranteed money coming in. So the market being down is not going to matter as much to someone who's living off of that portfolio.
And Tim, I don't know about like you or everybody listening or viewing, but like I don't feel as though the next 10 to 15 to 20 years is going to be as generous in the market
I agree.
as the last 10 to 15 years have been. So sequence of returns risk as the baby boomers hit their, bell
The
curve
peak.
of the peak
Yes.
of now they are retiring and withdrawing money. Demographics tell me like it's going to be more challenging for the market, not easier. So again, I think this is why, Tim, it is so vital that conscientious savers, investors, planners get a plan put together, a real plan, not just a tool, not just a 401k, not just Social Security or a pension, but a protect and grow written retirement blueprint. And ladies and gentlemen, of course, you can get that there at TJ Stearns Inc. by calling Tim Stearns CFP and setting up the time, beginning the conversation, and then having the details put together for you, an analysis on your current investments and income and a discussion of your goals. How does each and every dollar work to help you achieve them? That is where everything comes together in the pieces of the puzzle form a picture. That is the written retirement blueprint, the protect and Grow Retirement Blueprint. If you'd like to get that, if you'd like to get a copy of Tim's book, the number to call 800-640-2256, 800-640-2256, 800-640-2256. And Tim, some of the strategies that we've talked about on today's show for addressing and dealing with risk, I hear being echoed. I remember these when reading your book, Solving the
Yeah.
Modern Retirement Riddle.
Right. And speaking of that, I think we should offer the book to the first 10 callers that have over $2 million to give us a call, and we will actually get the book into their hands as quickly as we can, along with our Retirement Right book that we put out, a booklet of different articles about like sequence of returns risk and that type of thing. But again, to the first 10 callers with over $2 million, give us a call and we'll get the book into your hands along with that good information.
800-640-2256, 800-640-2256. So Tim, when we see market volatility, how do we make lemonade out of lemons?
Well said. The one thing that we're telling people that come in to see us is that if your portfolio has taken a hit, and again, I've seen so many people with, baby boomers who've had way too much money in these magical stocks that they thought were going to take care of everything. They're down considerably. Well, guess what? We could make some lemons into lemonade, and that is by doing Roth conversions. Right now we have some things working actually in the consumer's behavior, the investor's behavior, that the stock market is down for the year, and we also have this tax income rates, the income tax rates, excuse me, that are the lowest they've been since the early 80s. So why not do some Roth conversions? Right now, if I am newly retired or I'm going to be retired, I am definitely looking at that as a thing to do. Because the bottom line is it's just such an opportunity, and again, making lemons into lemonade.
And Tim, if maybe we have been rebalancing along the way and didn't have all of our money exposed to the risk of the market, maybe we have been sort of thinking, hey, I do need to make more investment. When is the right time to do that? Like adding contributions, upping the
Oh
401k
yeah,
contributions, starting to invest. Like it aren't not trying to time the market, but
no,
just taking advantage of the time where we are at within the market, making
right.
contributions and doing rebalancing. And then, like you talked about, making those Roth conversions, kind of the silver lining on a gray cloud, right?
I love that idea, and we've done that with a lot of people from this show as well as my classrooms. That people are coming in and, what can I do now? Do I just stand pat and wait for something better to come along? And we tell them, no, let's take a look at your Roth conversions. Right now is a great time. And if you're sitting out there wondering whether it is or is not a good time, give us a call. We have a CPA on staff. We can figure out real quick where you're coming in at as far as these Roth conversions.
I
Um,
love the online calculator too, Tim. I want to throw that out there. The MVP CFP,
yeah,
most valuable professional that you got, ladies and gentlemen, might be your certified financial planning professional, MVPCFP.com. That is where you can run your own numbers on the retirement tax bill calculator. And Tim, I've thought about this a lot. You say it often. Everybody can tell you how much they have in their retirement accounts.
yep.
Pretty close accuracy. Almost no one can tell you how much they're going to pay in taxes on those accounts. That's why it's online, the retirement tax bill calculator at nvpcfp.com.
It's an eye-opening report and it's free. No, as my dad used to say, there's nothing better than free. And I tell people take advantage of that so you can start to figure out what you're going to be paying. I mean, you'd never go buy a house without knowing what all's involved in it. Like what rehab do you have to do? How much are the property taxes? Yet I see people going and winging it in retirement and not knowing what their true tax bill is, how they're going to live, where they're going to pay their bills if the market's down. And I know another thing that I've been hearing, and I
What your
found
interest rate on your mortgage is. Like, would you
exactly
go into it not knowing that? That's essentially like
right.
what is the tax rate that you're going to pay on your even larger asset, your 401k, your IRA, your retirement account.
Exactly. Going in blind like that is no way to go through retirement. So why not at least accentuate it and figure that out?
Yeah. MVPCFP.com is the
Yep.
website, ladies and gentlemen. Go there, you enter your age, the amount that you have ballpark in your retirement accounts, tax deferred, your estimated tax rate. Click a button and see what your tax bill is likely to be if you simply defer to the IRS's guidelines
Yeah.
and plans and requirements versus if you are a conscientious, proactive planner, what you could do to bring that tax bill down, show you the side by side numbers, and then don't act on that without consulting your professional. And that's, of course, where Tim Stearns, TJ Stearns Inc., Tim Stearns CFP, and their on staff accountant can step in and help you understand how exactly to work that conversion process and realize a lower tax bill, a lower lifetime tax liability. MVPCFP.com, the website. Or again, just they can run the report for you as well if you'd like. Just give them a call, 800-640-2256, 800-640-2256. We probably still have copies of that book, Solving the Modern Retirement Riddle, left available. Give a call for that if you'd like that one. Tim, lots of information on today's show already, but we got a little bit more time. And in fact, we were going to talk about financial spring cleaning, and it's that time of year, pollen's in the air, cobwebs, yard work, and you
Yeah.
want to tidy things up. How about consolidating accounts? Like, isn't there a time and a place where cleaning up your financial house makes sense and helps with all of these things that we've talked about today?
We've seen that quite a bit as well because people are coming in here, baby boomers that say, "Oh, I have a 401k here, a 401k there. I don't even know what is in it. I don't log into the account." We're tracking down a lot of assets to people and then therefore, consolidating them to make life easier because if God forbid something happens to the spouse, the other spouse might not even know how to get their hands on that money
Mm,
and it's theirs.
mm.
So that's one of the things. The other thing we're seeing a lot of people are tired of hearing from their quote unquote advisor that, markets go up, markets go down, you just got to wait it out.
Yeah, this
Y-
is
You
just
know,
what you have to deal with.
Right, exactly. And that doesn't work when you're retired, or you're about to retire. Many investors are pushing the panic button. I've seen this. But here's the good news. If you have a plan, you can avoid the losses and literally sleep better at night. So the big thing we're trying to tell people out there is that if you're looking for more in a money manager and someone that can actually get you through retirement by having a plan, that's what we do here.
Again,
And we'll analyze and we don't charge for our time for that, but we will make sure that you leave our office smarter from meeting with us.
more informed about your money. And I think
Right.
that's everybody's goal for higher confidence with our money
Exactly.
and our planning, our standard of living into the future. It is the goal, it is the mission at TJ Stearns and Tim Stearns CFP puts together that written protect and grow retirement blueprint, ladies and gentlemen, your plan mapping all of these things out. Give a call, no cost, no obligation, leave the checkbook at home, have a discussion about your goals, share as much or as little information as you feel comfortable, but get that plan put together with experienced, qualified professionals who've seen this many times and helped people navigate through it. 800-640-2256, 800-640-2256. And I know that, Tim, budgeting, debt consolidation, cutting back on expenses, those are part of financial spring cleaning as well. But like the things that you talked about today of having success in the markets, regardless of market condition.
Yeah.
I know that you put those plans together with a long-term vision,
Yeah.
diversified strategies, trying to hedge and address risk, and that consolidating often, doing that financial spring cleaning of where you've squirreled away money helps with rebalancing, helps with improves diversification, often brings down the overall cost of the portfolio. There's so many benefits to doing that.
Well, I mean, nowadays with people, they don't need just a money manager. They need, basically someone who could advise them on all those different areas, Medicare, Social Security, taxes. And that's why, we kind of try to work as a Swiss Army knife, for our clients as far as, we have a CPA and a state attorney on staff. These are the types of things that people are worried about at night, but they don't know where to go. And, I'm hearing it over and over from people who come in here and they go, yeah, my other advisor wouldn't tell me how to do a Roth conversion and I should talk to my accountant.
Hmm.
And, I don't even know what my accountant, what his phone number is because he doesn't call me back. And when I used to call him and, emailed him. And at the end of the day, we're trying to show people there's an easier, better way to get a handle on your finances, and we can help them.
Tim, with the increased volatility that we have seen, I know you teach classes
Yep.
throughout the Chicagoland area. Are you seeing interest and attendance in those classes picking up? Like what is the general pulse? What is the feel of investors that you talk to and throughout the Chicagoland area?
People are really in a quandary, so we've seen a jump where we're sold out and we have a waiting list. If they want to give us a call, we can put them on that waiting list and get them in. Or we're able to talk to people too, through a Zoom or a phone call. We can consult and, just have a conversation and a discussion about what's going on with them. And if we can help them, we will.
Again, they are here to assist, ladies and gentlemen, but people are getting worried, and we want to have those plans put together ahead of the time when everybody else is worrying and concerned. We want to know that we've got the tools and the mechanisms and the strategies in place to help us keep a sound mind and stable mental, emotional state, a good psychology about the investments, because investing long term is about profitability over time. It is about that long-term vision of time-tested, diversified strategies. That's exactly what Tim Stearns can help you put together, but also some new and innovative strategies that help to control the risks when those down times, when the volatility does occur. So if you'd like to learn about hedging, about stop losses, about covered calls, strategic management, if you'd like vehicles that prevent and avoid market exposure, non-correlated assets as part of your overall portfolio. That's what some of this discussion is going to be about, and putting together a plan that is based on your goals, your time horizon, your expectations to help you achieve those. So pick up the phone, give a call, 800-640-2256, 800-640-2256, 800-640-2256, and some light but helpful reading. Tim, a few more copies of Solving the Modern Retirement Riddle still up for grabs.
Well, I'd love to get that in people's hands. I've been told by a lot of people that it's real straightforward, kind of spells out what we're all about as our strategies and our philosophies go. And, people take a lot of nuggets from it of wisdom, I guess, which I love to hear. And that makes me feel good that people are learning about their retirement through us.
Give a call, 800-640-2256, 800-640-2256. TJ Stearns, Tim Stearns, CFP, Arlington Heights, conveniently located, meeting with, assisting, and advising savvy and proactive investors throughout the Chicagoland area and beyond. They can be reached at 800-640-2256, 800-640-2256. Tim, always a pleasure having you here as our guide through this crazy financial world, keeping us focused on what's ahead, giving us that plan, that protect and grow plan for our financial future.
With all the volatility, give us a call. We can help you.
800-640-2256, tjstearns.com, online, tjstearns.com. And once again, always a pleasure having you here on the program, Tim.
Thanks, Pete.
Tune into Chicagoland certified financial planner Tim Stearns' full radio program and visit tjstearns.com for many valuable resources, including other great episodes of Chicagoland Retirement. Be sure to subscribe.
Investment advisory services offered through Cornerstone Securities, LLC. The information presented on this program is provided for informational purposes only without warranty of accuracy, completeness, or suitability for particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature, not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs.